Hey everyone, it's George from Blockchain DXP, and today we have Andrew Whitworth, who's kind of the specialist so far as regulation and policy is concerned. So firstly, Andrew, thank you so much for doing this episode. Really appreciate you talking to me, sharing your knowledge and information from a regulatory and policy point of view. Now, you have played a very crucial role for Ripple in the EMEA region, so I'm really eager to delve into the insights so far as crypto policy and regulation is concerned. Now, Andrew, you also co-founded ICDEF, and I was going through the website. It has a massive research database. I'm pretty much sure our listeners would definitely like to know more about it. Now, what stands you apart is that you've had a work experience with the Bank of England on several key policy mandates for Mark Carney, and you've also written a book that is regulating banks, the politics of instability. So thank you so very much, Andrew, for doing this. Really, really appreciate this.
Oh, thank you very much for having me. It's a real honor to be on your podcast, and yeah, very much looking forward to talk about all these different things.
Likewise as well, and once again, really appreciate you doing this. Now, before we start, just wanted to check, Andy, how's your day been so far? And is there anything interesting planned for this particular week? And are you looking forward for anything interesting so far as cryptocurrency, blockchain, or tokenized world is concerned?
Yeah, well, I mean, I think it's pure coincidence, but my day's great. And actually, to answer all your three sort of separate questions there, today is the first day I've launched a consultancy, a policy consultancy for crypto and fintech. So day is going well. Very excited to finally have that out. And well, I wouldn't like to assume that this is going to be a big deal for crypto per se, but hopefully I can start adding value in a different or in a new way to the wider community.
I definitely am hoping for, given your experience, in policy and regulations, I'm definitely sure the cryptocurrency world will definitely benefit by it. Now, Andrew, to our listeners in the MENA region, can you share a bit of background about your journey in the cryptocurrency and blockchain space, from your time at the Bank of England, your time in Ripple, and upcoming NDBs, please?
Yes, of course. I mean, so as I say, like right now, I've just set up this consultancy called Global Policy Limited, which really encapsulates the whole journey I've been on so far. So it's global and it's about policy. I really got into this world of financial regulation of innovation and technology through my studies. I did a PhD in political economy, looking at how politicians, politics, regulators, and regulation interact to influence financial markets and what the outcome of that is. We can talk about that a bit later. It's related to the book you mentioned, but not to give any spoilers, but I mean, the outcome is financial instability and financial crises. So the question was really, why is that? So as you say, I was then very lucky to be able to work at the Bank of England afterwards for a number of years across different topics, starting off on traditional banking regulation, going through some international coordination between different central banks and authorities, and then ending up in their fintech and crypto hub. So understanding how these developments in this space, how they're interpreted by regulatory authorities, how they should be treated, and then sort of working on the analysis of policies themselves. So from there, with that background on the public sector side, I wanted to experience the private sector, understand how does this innovation actually happen internally? What are these companies doing and how are they doing it? So I first went to a payments fintech firm in the UK that was sort of trying to optimize card payments, and then from there moved on to Ripple. And really, my journey has taken me through this towards the crypto space because that's where the really big sort of intellectual questions were happening, which is, yeah, you can talk about bank regulation that's constantly changing. That's important. I mean, very important. Everyone uses banks every day. But the big questions were really answered about 200 years ago. And you're sort of like adding these like incremental things on top. And then I was looking at crypto. This was maybe sort of 3-4 years ago. And there seems to be almost this entirely blank slate of like, how does policy work in this space? What is regulation? Should they be regulated? How do you regulate them? Well, that's just a much more interesting space to be answering a lot of these questions. They're really the same questions all the way from my academic studies through the public sector, through the private sector. And so working at Ripple, as one of the major blockchain companies globally on these questions was a real privilege and interest. Now, hopefully I can take a lot of these combined insights and offer them to different people around the world and different parts of the ecosystem, as I say.
Thank you so very much for that. Now, regarding Ripple, what has your working experience been like with Ripple?
Yeah, I've left now, so I shouldn't speak too specifically, but it's very positive, right? I was there for 2 years. Everyone, I have to say, is very collaborative, constructive. It's a very nice working environment and working on some really interesting topics. Ripple's, the challenge it set itself is to improve cross-border payments. I think everyone in the world would agree this is a real problem, cross-border payments. They're slow, they're inefficient, they're expensive. They have which all of this together has big implications for financial inclusion, global inclusion, economic growth. And Ripple set itself the challenge of trying to solve this using blockchain technology. So very interesting set of questions. And hopefully good solutions.
And the team is phenomenal as well. And what would you say is your biggest learning experience being with Ripple?
That's a very, very interesting question. I think, the one thing I always appreciate about Ripple, it was this very collaborative approach, collaborative with the public sector. So that was largely part of my job, but also with other parts of the ecosystem, be it blockchain, also traditional financial ecosystem. It really sees itself as sort of sitting in the middle of these different, we're trying to join together these different players in these various different sectors. And for me, that I think is the exactly right approach. We're still in the phase in the wider crypto sort of sector to grow the technology, grow the use case of the technology, realize a lot of the benefits of it. And I think the best way of doing that is collaboratively. And that is something which Ripple is, I think, very good at.
Yeah, and I know the former managing director, or the Naveen Gupta of Ripple, and he was asked this question, what he does for work-life balance, and he actually said meditation. So, that is definitely something our listeners are definitely on board. Now, any advice do you have for our listeners, let's say, who are planning to look at work for Ripple?
Yeah, well, I don't want to suggest that we have some on-brand thing, but I also meditate quite a lot, and I've spoken to Naveen about it. It's amusing, but you don't have to do that. Work-life balance is always a personal thing, right? And it means different things to different people. Ripple as an employer has a very good work-life balance. It doesn't sort of sweat you or anything like that. I think the important thing is being interested in what you do, right? And then hopefully I won't come out with the cliche, but like if you enjoy it, then when you're working on it, you're happy, and of course you take time to relax afterwards, and of course you need weekends and holidays and breaks and things, but you're still motivated to go forward. I think the challenge of work-life balance is when you lose interest or something's not going right, then it feels like a slog, and then you need something different in your spare time to try and overcome it.
And there's always this saying, let work be your reward, not your way to reward. So, what you said is definitely spot on. Now, Andy, let's talk about regulations in the Bitcoin, cryptocurrency, and blockchain space. Now, one of the vision of Satoshi Nakamoto and the purpose of creating Bitcoin was a movement towards separation of money and the state. Do you envision a world where we will have 100% separation of money and the state?
Well, look, I mean, this is the fundamental point, right? The fundamental point of Bitcoin, and really like the core issue. I think for me, it's, well, I don't know if people agree, maybe they don't, but Bitcoin's a political question or a political issue, not an economic one. The language is economics, the mechanism is perhaps economics, but Bitcoin itself is political. As you say, it is about separating from, people's individual value and their economic life from the state. It's a perfectly reasonable view to hold, to want to escape the state in this libertarian sense. It's not one I personally hold, but it's perfectly reasonable if other people do. When you talk about sort of separating the state from the market, I find it difficult to understand. Money itself is a social construct. It's how we interact between people. In a sense, it's a type of language. And the state is the way that humanity has developed ways of managing its social interactions. So I don't really understand how you can separate money from the state in this sense. So, I mean, to answer your question specifically, no, I don't think we'll ever get to 100%, because I think that they're actually two sides of the same coin, if coins are metaphor to use. I think my take, as I say, some people want to escape the state in this libertarian approach, perfectly, reasonable political view or philosophy to hold. For me, it's a question about improving the state. If you don't like what the state's doing, and there are very many different ways of citizens interacting with the states they live in, but every single human being alive lives inside a state, and I think the starting point has to be to accept that reality and work to improve it, rather than sort of hope to try and get out of it. So that's my take on this core question, the political economy question of Bitcoin.
Yeah. I mean, it's a different perspective, and I 100% agree to what you're saying. Now, because I do feel that regulations are needed, and as long as they protect, let's say, customers, investors, in the market, I definitely do think regulations do a very good job. And Andy, I was also listening to your episode with Outlier Ventures, where you beautifully touched base on something really important regarding regulations, where you said that, regulations most often did not impact technology, and they do stifle innovation, whereas regulation should focus on the business aspect of it. So to our listeners, can you elaborate on that point? Because what you said is absolutely spot on.
It's very interesting. Yeah. So so for me, when I look at regulation, I think of it in two separate ways. One is there's sort of probably what most people think of in regulation, which is the protections, rules of the road, and how you operate and how you make sure that a particular company protects their consumers, their customers, sort of the safety side of it. That's very important. The other part of regulation for me, and this is sort of where I look at it, particularly in the crypto space and financial innovation space, is it is like what I would call enabling regulation. So it's regulation that builds a space or creates a space for people to build new technologies in it. I mean, that's quite a sort of what's the word, like high level conceptual way of talking about it. But what this really means is I think actually MiCA, the European Crypto Asset Regulation, the EU's one, is actually quite a good case of this, where it says, you know what, these are our principles. This is how we're looking at the world, and in that way, it opens up a new space for actors to come in and develop and build. Whereas what we may assume, and certainly coming from the Anglo-Saxon political viewpoint, we assume that no regulation means you can do what you want. Actually, if you don't have the trust built through regulation, if people don't know how to interact with you, if they don't know how you're treated by the state, but also by other market players, it can be very difficult to build things. We don't just live independently on our own and we can build something out of it. Everyone requires this collaboration and this working together. So for me, it's this question of enabling regulation as well as, let's say, safety regulation. And I think when we're talking about financial innovation, but technology as a whole, AI is an obvious place where this comes in. This is a great way for states to first build businesses or build industries in their jurisdictions, which is their interest, but also to create a pathway for constructive, long-lasting innovation.
And regarding AI, I was just reading through the news just yesterday, I believe, where Saudi Arabian government, they're focusing on regulations, and at the same time, they're making sure that they don't stifle innovation. And what you said is absolutely spot on as well. Now, I wanted to ask you one question, Andy. During your tenure, let's say with the Bank of England and Ripple, have you seen any changes in people's perception towards cryptocurrency? And this is more from a regulatory point of view.
Yeah, I think there has been one. I think the basic answer is regulators have accepted that crypto is here to stay. That's the real point. And I think that sort of understanding, that acceptance came probably about 5 years ago now. So a while ago, certainly through the pandemic, let's put it that way. But that acceptance that it's here to stay is something that will require regulatory treatment, again, so that traditional financial actors know how they're allowed to interact with it, how they can interact with it, so that businesses can build, startups, new innovative businesses can build something knowing there is a market they can address. Their consumers know they can trust companies in the space. So I think it's that acceptance, that recognition that this is a technology, it has uses, and people may want to develop them for their own businesses in a perfectly legitimate way. And that's what's kind of unleashed this set of regulation that's been going on around the world for about 5 years. Now, there is one huge exception to this, which is the United States of America, where they have not, I don't think you could argue that, no, they have not seen this sort of acceptance that crypto is here to stay, neither legislatively through Congress, nor through the White House, nor through the regulators. And it's a very difficult environment. And I don't think it actually suits anybody's objectives, public sector or private sector or consumer. And we've seen a lot of American firms deliberately moving to jurisdictions like the UAE, particularly, right? Also across Europe and Singapore, Hong Kong as well, where there is greater regulatory clarity.
And regarding US, hopefully things might change this November, because I believe day before yesterday, Donald Trump, he announced his vice president pick, who's JD Vance, who's very pro Bitcoin and cryptocurrency. And regarding, the narratives, just a few days ago, Larry Fink, he did go on CNBC and he actually said that he was a massive detractor of Bitcoin, but he has taken a completely U-turn regarding Bitcoin and he's very pro Bitcoin, so to speak. Now, if there is one advice, Andy, you'd like to give to regulators, what would that be from your point of view?
Well, I mean, I'm not sure it's for me to give advice per se, but I think I guess the starting point has to be accepting reality, right? And that's true anywhere in the world at any period of time. You've got to just see the world around you and accept what there is, and then you can decide how you want to try and influence it or help things develop. As I say, I think in large parts of the world, when it comes to crypto, that acceptance has happened. I hope America, through its own methods, gets there, because it's a pretty big exception that will have very odd outcomes for the rest of the world. But then the other piece is something which, it's not advice because regulators are already doing it by and large, but it's collaboration. It's collaboration amongst themselves, it's collaboration internationally, it's collaboration with different sectors. It's helping the crypto sector collaborate with the TradFi sector. It's helping all these different actors come together with their own unique viewpoints, with their own unique objectives and interests here, but bringing them together so that people can work together rather than trying to carve them out and separate across and things like that, which in my mind leads to little silos, and the benefits of technological innovation get lost. And you end up just entrenching sort of business models that perhaps do need to be updated.
And Andy, based on your experience, because you've been actively involved in policy discussion around financial stability, how can policymakers mitigate the risks associated with crypto assets while at the same time fostering innovation as well?
Yeah, well, touched on this question already. That's the core of the kind of conversation we've been having already. Like, I think, the answer is regulation, right? Like, and this is why I find the American approach so confusing, because certainly coming, I live in London, coming from the European sort of viewpoint, if a regulator doesn't like something, you regulate it. Like, their power, their way of influencing the world is through regulation. So if you want to support something, you regulate it to give it this sort of enabling environment I talked about. If you don't like something, you regulate it to put boundaries around it in a way that you feel is correct. The American approach of we don't like it, therefore we won't regulate it, seems to me absurd. So I think to your point around, or your question around financial stability, again, like in most of the world, these questions are being answered already, and it's partly through regulating and creating policies around the on and off ramps from TradFi into on chain. It's around creating rules of the road for actors on chain, so customers know how to use it and know what they can expect. I have to say I would like to see, certainly across Europe, and I think the UAE is better here, I would like to see more, it's not direction, but I would like to see the regulators sort of using their moral influence over the banking sector to stop this debanking of crypto. Because for me, this is pure protectionism from the commercial banking sector. Particularly in the UK, for example, they do not come up with good reasons for why they are trying to limit sort of either customers using their own bank deposits to buy crypto assets, or giving crypto asset companies access to banking services that they need to be able to operate as a bank, as a business in the normal economy. I would like to see governments and authorities bringing the two sides together and saying, look, you've got to work together. Now, one of the aims of regulations we talked about already is to create that sort of set of rules so people know that they can be trusted, and it becomes a lot harder for a bank, for example, to say, oh, we don't trust this company when it's been regulated, and when it's been regulated by the same authority that regulates them, right? Like in the UK, for example, the FCA regulates banks, alongside the Bank of England, but regulates banks, and also will regulate crypto asset service providers. So for a bank to turn around and say, you're too risky, we don't trust your regulation, is actually quite insulting to the FCA and their own regulators. So I'm hopeful that the two sides, traditional finance and whatever you want to call it, crypto asset finance, will come together. But I do think it requires a bit more of an active lean in by governments.
I think the terminology people talk about is Web3 right now, isn't it?
Yeah, it's changed around a bit, right?
Yeah. And regarding US, the only thing I have to say is that there's some drama going on between CFTC and SEC, as in who gets to go and regulate cryptocurrencies. And I was really listening to an episode with Timothy Massad, who was the former CFTC head, and he was the guy who actually said that Bitcoin is not a security and it is a commodity. And what he said regarding Facebook's Libra project was that when that project was announced, the United States government, they were worried that it'll be a threat to the US dollar. And just a month after that, he actually went to China, and China was worried that if Facebook's Libra goes into live, it would be a threat to the Chinese yuan. So it just shows, from a regulator's point of view, the different perspective that they have. Now, I do have a question regarding stable coins, Andy. Now, stable coins, they do account for, over 80% of the total cryptocurrency market volume. What are some of the practical steps regulators can take to address the challenges that are posed by stable coins and the emerging crypto asset space as well?
Yeah, it's interesting, right? Because for all the enthusiasm and energy created by Bitcoin and then other cryptocurrencies afterwards, it's stablecoins, as you say, is the representation of fiat currency on chain that has this huge market share and activity. And that's, I think, shows how people around the world use this new technology, right? So they see it as a way of improving their financial lives, their financial activities as they're already doing it. They don't necessarily have a strong opinion around the political economy questions we talked about earlier. So I think that's a very interesting fact. There's also the question around institutional adoption of Web3 finance and the use of stablecoins here as a way for the large institutions, traditional financial actors, to get on chain, right? Rather than the retail people who I think often, certainly even I, instinctively think about when we're talking about this sector. But we all have a lot less money than the big banks, so obviously they're going to dominate these things. In terms of the challenges of stablecoins, or how they can be addressed, again, this is around the world largely happening through regulations of the crypto asset space. I think there's a reason most jurisdictions have started with stablecoin regulation as their first phase of regulating crypto assets, and then moving on to other types of crypto assets. And it's because of this link with both the traditional financial sector, but also with fiat money, right? And your point just now around Libra is absolutely spot on, I think, and that's a question of monetary sovereignty, right?
Mm.
That's not a question of financial regulation. That's not a question of financial stability or even consumer protection. That's monetary sovereignty. That is states saying we don't want to see our ability to influence the monetary conditions of our countries changed by a foreign company or an international company. It's foreign everywhere, right? So I think, and well, Libra itself, I don't think was well, as a proposition, it didn't seem to work particularly well, particularly when it got caught up in all these regulatory things that made it change itself into 100 different things. But I think the net effect of stablecoin regulation around the world already has been to break any idea or any hope for an internationally fungible stablecoin that can be used around the world. We've already seen that. I mean, MiCA already doesn't allow that, right? And this is why Tether's been kicked out by some exchanges, why Circle's created this sort of artificial fungible USDC for the EU. So I think, again, going back to the earlier point, we've got to accept the reality that states have jurisdiction over their, or have power over their jurisdictions, and they have decided they will not allow an internationally fungible stablecoin. I think that's a shame, because I think that would unlock a huge amount of efficiencies in the global financial sector. Interestingly, I think it would increase the dominance of the US dollar in international finance. So the fact that the US seems particularly against it is a very interesting sort of conundrum. But you can see why countries don't want to find themselves being dollarized kind of through the back door through a stablecoin that they can't control.
Yeah, and regarding MiCA, what has happened is that there's an exchange called as Bitstamp. They have decided to drop, Tether USDT, so Euro-backed stablecoin, and Circle. They have taken a completely different approach, and they've got a license. I think it is called as electronic money institution license. Now, my question is, what is going on with MiCA? Do you think that would have an impact in the MENA region as well?
Yeah. So, I mean, it will have an impact in the MENA region for sure. I think there's two routes. One is the market route, and one is the, let's say, policy emulation route, right? Where they see, did MiCA work well? Did it not work well? Is there something here we can learn from? So it's this idea of being a fast follower, which I think is quite right for a lot of jurisdictions. Certainly the UAE has done this. I think UK also tries this. Let the Europeans sort of try something out, see how it looks, see how market responds, and then you can copy the bits you like and kind of change the bits you don't like. In terms of market effect, again, it depends what we're using or what people are using stablecoins for. A lot of the regulation of them, certainly in Europe, has been the use of stablecoins for retail payments. So really like buying a coffee on the street or something for a stablecoin. I'm not sure anyone really does this or particularly wants to, right? And so the actual on-chain use of a stablecoin has a very different regulatory treatment, much sort of, in a sense, not left out of the regulations, but carved out of the sort of core regulations. Now that kind of thing can happen, that can be done globally for anyone, right? So that can just have a direct effect on countries in MENA, because you can easily sort of access a exchange elsewhere in the world that might have a different regulatory treatment if you prefer it. So the question is whether they'll prefer it or not. I think, to your point around like Tether being delisted and stuff, I think we're going to see a lot of flux over the next 6 months, probably, of different exchanges taking different routes, different stablecoins getting different treatments. I think it will settle down, as I say, probably the start of next year, when kind of a market best practice has come along. Circle played a blinder with its sort of the PR over its announcement. The news is they got an EMI, which is a particular type of license in Europe. They've been around for a long time. These licenses, the new thing is how this license now allows you to launch, issue, and use an EMT, e-money token, which is the European way of talking about stablecoins. So yeah, they got that license. These things take a year or two often to kind of receive. But the fact that they announced it at the same time that MiCA was coming to force of stablecoins with the cooperation of the authorities, it is fantastic PR.
Now, see, a lot of the Bitcoin maximalists, the guys who only believe in Bitcoin, they don't like this news, because what they feel is that Circle USDC, or the issues of USDC rather, and Tether USDT, that is Bitfinex, they are literally replacing the role of a bank. Because, this goes back to why Bitcoin was created, just have peer-to-peer transactions. So even Bitcoin maximalists, they don't like this news. Now, regarding the cryptocurrency space, Andy, could you discuss any initiative or collaborations you're particularly excited about in the realm of blockchain and crypto regulations?
Yeah, of course. Yeah, it's funny. I don't think Bitcoin maximalists like anything other than Bitcoin, right? That's kind of the position. They're not wrong in that sense. And look, the force of the regulations behind stablecoins across the world is to say, look, what you're doing looks an awful lot like banking, so we're going to put limits on you to not disintermediate the banking sector, and we're going to make sure, in the language, for example, in the UK, that the stable coin is at least as safe as bank money. Now, that kind of makes me laugh because bank money is garbage. I mean, that's the reason we have so many banking regulations to try and make this money safer, more stable, more reliable. In my mind, a stable coin is by definition better because it's immediately backed and held by safe assets, one-for-one backed. Of course, there's a huge piece of work around making sure that companies are operating safely, securely, and trustfully, or with trust. But assuming they're operating correctly, then you've got one-for-one backing of the underlying asset that you need to have the stablecoin, right? So it's safer than bank deposit. And in my engagements over the past couple of years with different regulatory authorities, that is not always a point that they are willing to accept. And I think it comes from a real fundamental need to have a conversation around what bank money is, how money works. The role of banks in the economy and finance. Where does I don't need to get into a conversation about bank deposits, but yeah. So I'm sorry, but to your actual question on different new initiatives and things going on. I think the UAE is a great place, and the central bank of the UAE has been doing some very interesting stuff around kind of opening the door for international players to work with local partners, build some collaboration. I think there's a bunch of different sort of initiatives going on in Dubai around using blockchain for customs, to facilitate trade, and real estate as well. I know the DIFC courts, for example, is doing some interesting work on inheritance and wills and stuff like that. So I think what I find interesting, I've talked about it before, but it's collaboration, but it's bringing together different sectors so everyone can kind of use the technology for their own purposes, but building new utilities, getting better efficiencies, basically upgrading the sort of the technological level of activities that we're already doing. We don't need to invent, well, perhaps we do, people will develop them for their own business reasons, but just being able to do what we already want to do and do in the real world, but in a more efficient, quicker, safer, more durable way is, I think, great. And I think the UAE is actually a really good example of this, of getting the different bodies, public bodies, ecosystem, bringing them together, working out what needs to change, doesn't need to change, getting the rules changed where necessary, and bringing in these international players with the local people for as I say, different objectives, for the different governments' objectives, regulators' objectives, business objectives. I think that's really quite exciting.
Yeah, and regarding Dubai Customs, they're working on a blockchain, but at this point of time, it's unclear if they're working, let's say, on a permission blockchain or if it is on an open blockchain. I feel that if it was in an open blockchain, they would have announced it, but I could be miserably wrong. And you mentioned about Dubai Code as well. I think the people from the metaverse space, they should know that Dubai Code also has something in the metaverse where, you can have hearings and quite a lot of things regarding litigation in the metaverse. And you touched base about fiat currency. The only thing I can say is, there's this saying that the greatest meme of money is the US dollar. So, what you're saying in comparison to stable coins is absolutely spot on. Now, Andrew, do you see yourself continuing to influence policy in the cryptocurrency space directly or through your advisory role?
Well, I hope so. I mean, it's kind of up to the others whether they get influenced or not. But yeah, I mean, look, as I said sort of at the start of this conversation, it's not necessarily influencing policy. It's helping companies understand how the policy environment works, how they can best kind of get through policy to do their innovation, to build. Because at the end of the day, it's completely right for public sector to be one step behind market innovation, technological innovation. They are not the people who should be, ideally, they're not the people who should be inventing new things. They're the people who should be saying, look, this is the landscape, this is what's safe, these are the principles we operate by, go ahead and do it. So it's hopefully I'll be able to sort of help companies as they grow, as they scale up, or large firms from one jurisdiction looking to move into another one, trying to understand the landscape. Or really, companies moving from, for example, being a tech company to something that will be financially regulated, and trying to understand what that means for them, how that works, and helping them understand, hopefully, that policy regulation is not a bad thing. It's not just a cost to bear. It's not some problem you've got to try and lobby your way out of. It creates opportunities. It says, look, here's a space we're very happy. We're encouraging you to develop a new business in or to innovate in, and helping companies kind of see your regulation as the means to growth and the method of growth is hopefully something I can influence. It's a bit like there's that book, The Obstacle is the Way. It's kind of that. I mean, I wouldn't argue that regulation is an obstacle, but kind of understanding that these things that can look like costs coming at you, it's like, well, hang on, think about them a bit deeper. Think about what that means for your business. Put together the regulation and your business model to create almost a regulatory business model. Like, what does your business look like in this environment, and how can you grow it in the best way for you, and while still maintaining the public objectives of regulation.
And you need to be an expert, to put out a statement like that. So what you're saying does make quite a lot of sense. And am I right in saying that you'd be doing all this thing as part of ICDEF?
No, no, no. So I've launched a new company called Global Policy Limited. ICDF, ICDF, the Independent Centre for Digital Economy and Finance, is a sort of think tank or a research platform that I launched with a friend, a co-founder, a couple of years ago.
Okay.
And that's very much about bringing academic insights into the policy and industry space, because basically I was quite frustrated a couple of years ago because I was reading all these kind of policy documents coming out of former colleagues and regulators and things.
Okay.
And all the footnotes were just referring back to other policy documents. I was like, yeah, but none of this is true. None of this is based on anything. It's just like people repeating each other. I even wrote some of the early ones that they were quoting or was part of that process. And I'm like, well, that's not what we meant. I got frustrated. It's like, well, there must be people in the world, academics, who are creating a non-hype based, a non-sort of political, or they're doing non-political, non-hyped research, empirical research into the phenomenon around crypto, blockchain, TradFi, like how it all works together. So the point of ICDEF is very much to find these academic papers, put them in the database we have on the website, summarize them in a really simple way, and then tweet them out to people, because then hopefully policymakers and industry leaders might actually read a one-line tweet. So that's the ambition behind it, just to bridge these different sectors together so people can learn from the good work being done. So there is some empirical basis for a lot of the statements, facts, and ideas that people are coming up with.
And I just had one question regarding that, because it did mention something about blockchain analysis.
No, that's so my co-founder, Freddie,
Okay.
who is a Bitcoin maximalist, as we talked about. He's an absolute Puritan. In fact, he runs, you may know it, Bitcoin Policy UK, and he's got a very large Twitter following around that. So you should really have him on if you haven't already. But anyway, block analysis is our newsletter. He just came up with a great name. So no chain on-chain analysis or anything like that. It's just what I think is a great name he came up with for our newsletter.
Yeah, there's something similar called as Glassnode. They do, on-chain analysis, and they do it only for Bitcoin, and they do it for Ethereum as well. Now let's talk about London and England. Now, recently, UK has appointed a new Prime Minister, and he's from the Labour Party. Now, how do you anticipate his leadership impacting the cryptocurrency regulation and policies in the UK?
Yeah, it's a big question for businesses over here. Crypto businesses over here. I think the main point, the main thing to take away is there being a large majority of the government, for any government, frankly, and a fresh majority will create an awful lot of stability, political stability, economic stability, and regulatory stability, and that's a good thing. The past number of years, there's been a lot of instability politically, and that even where politicians aren't directly influencing regulations like that, it just has this knock-on effect of people not sure who's in which job, what's going on, what priorities are. So the key thing about the Labour win is the stability it's going to provide. I think there's a second part to this, which is the regulators, particularly the crypto regulator, the FCA in the UK, has been notably hesitant to finalize its rules, to sort of support all the kind of regulation that we've been talking about in this conversation. Partly, I think that's because they're very uncomfortable with the crypto sector in the UK. There's a lot of evidence for that. Partly, I think it's also because they were waiting for a government with a strong majority, and they didn't want to regulate knowing that in 3 months' time there'd be somebody else in charge. Not because they're necessarily trying to match government's policies here; they're independent, rightly so, but because they want to be sure that whatever they do is going to last for a while. So hopefully, the Labour majority will also unlock the FCA to actually start kind of really playing the game properly, doing its job in finalizing its regulations and its rules, and actually moving ahead with this in a constructive manner, because that has been lacking for a while. Well, very specifically on like crypto regulation in the UK, there were a couple of pieces of secondary legislation that were due to be put through Parliament through a sort of passive structure process this summer. Obviously, the election stopped all parliamentary business. These are on staking and on stablecoins. So hopefully the government can just dust those off, put them in, and hopefully by the end of the year they'll be on the books. And again, I'm not quite clear on what that legislation will say, but essentially I think it is going to say we need rules in this space. FCA, please go create them. So hopefully that will again help unlock some of this work that's been done but needs to be finalized.
I know of Andrew Bailey. He was a massive detractor of Bitcoin, but he did spend quite a lot of research in, understanding what stable coins is. Now, so far as Nigel Farage is concerned, he's now the MP as well, and he's a massive Bitcoin advocate. But at the same time, he does not like central bank digital currency. And I'm not sure if you're a fan of his or if you're not a fan of his, but he's definitely the most influential person, at least. So that's what I think. How do you see his influence playing out in the cryptocurrency and blockchain space, or Bitcoin space, to be precise?
Yeah, I mean, well, it's normal that if you're a Bitcoin advocate, you don't like CBDCs, and that's a very normal position to hold. Nigel Farage doesn't himself have power. I mean, he's an MP, but that's, there's 650 of them. His influence comes from being able to scare other political parties. So, this could go either way. If you like Bitcoin or don't like Bitcoin, you like CBDCs or don't like CBDCs. If he makes a lot of noise, it is very far from clear that will have a positive, that will have the effect he wants, right? The more he talks about CBDCs being bad, the more a Labour government will want them. The more he says Bitcoin's good, the more a Labour government will not want it. And not just Labour, but any party. So, you've got to wonder if you really want him advocating for you.
And, we talked about US elections earlier on as well. With November election coming up, how do you foresee the outcome impacting the cryptocurrency regulations and the market dynamics in the United States?
Yeah, in some ways, it's a very similar question to the one you just asked about Nigel Farage, but it's different in as much as somebody's going to win the White House and Congress, right? So they will have direct power to do things. What I found actually quite interesting about the US is, Trump came out as incredibly pro-crypto, sort of quite recently. I had assumed, not being a sort of close observer of the United States politics, I had assumed that because of the polarization there and the partisan nature of that, that would make the Democrats even more anti-crypto. They've been very well, until a couple of years ago, I would have said actually crypto wasn't a partisan issue in America, and then it has polarized into one with the Democrats being very anti. Interestingly, from what I can see, since Trump has come out pro-crypto, actually it somehow has made the Democrats kind of come to the middle and say, maybe we do actually need some thinking around this and not just attacking it. I wouldn't have expected that sort of I don't know what the word is, but that sort of outcome. So that's very interesting. So I think, whatever happens in November, I would expect, maybe I'm hoping rather than expecting, but I would expect the US, again, a bit like I was saying about the FCA in the UK, I'd expect the US to maybe get its act together, get in gear, and actually create some kind of legislation. Now, the question is what that legislation will look like, right? And that will depend on who wins.
Yeah, in the US, regarding the Democrats, what happened is regarding the spot Ethereum ETF approval, they did actually sign a bill literally 2 or 3 days before that, and the Democrats took a completely U-turn, and everyone was surprised. How is it that the Democrats have opted in favor of the bill? So it's going to be really interesting to see, what the future is. Now, are there any key policy differences, Andy, between, let's say, the current administration and potential successors, that hopefully in the upcoming election that could significantly impact, let's say, the prices of Bitcoin and cryptocurrencies as well? Because I was speaking to, Christopher from Triton Liquid yesterday. He said it doesn't matter if the Republican Party wins, and if they don't do any action, just the thought that, they have won the election, that will impact the price of Bitcoin and cryptocurrencies. So it could be possible that, say, they do not keep up to the promises, but will definitely impact it in a positive way. What are your thoughts regarding that?
Well, yeah, I mean, look, Bitcoin and other currencies following it, cryptocurrencies following it, are very sensitive to market noise, right? Or public noise. So I think in that sense, he's entirely correct, which is just the mere idea will get things going. I mean, in terms of sort of policies that might impact prices, look, some form of signal that these cryptocurrencies aren't going to be actively attacked, or Bitcoin won't be actively attacked by the US government, can only sort of improve trust, certainty, and usage of these currencies. So you would therefore expect them to go up in price. Whether that's a sort of sudden surge or just a sort of like grade over time, I don't know. But as all my Bitcoin maxis keep telling me, it's not about the price, right? It's about the sort of freedom that is embedded in it. So why should we care if the price of Bitcoin goes up or down?
That does make quite a lot of sense. Now, keeping the geopolitical situation, what advice would you give to investors and businesses in the cryptocurrency space regarding, let's say, potential regulatory shifts?
Yeah, well, I think it's what we've talked about already, which is look for places that have regulatory frameworks, either already on the books or that are coming, and engage with the regulators there. Because regulators, I have to say, are open and they want to learn and they need to learn, because by definition, they can't know what's happening in the market until somebody tells them. So find the jurisdiction that makes sense for your business, that has the sort of regulatory certainty either now or in the future that you need, and then speak to the regulators, speak to the policymakers, explain your business, explain how it's fine, how it's it's stable, explain how it helps their citizens, how it helps their consumers, explain how it helps the regulators with their own objectives for financial stability, right? We talked earlier about the stablecoins and the possibility of them disintermediating banking. Like, well, either a stablecoin or a CBDC. From where I sit, that's a good thing. Like, banks are really unstable. We've already talked about it, earlier. Like, if we collectively as humanity have invented a series of instruments, tools, mechanisms that can allow people to hold a perfectly safe asset in a very secure way. I mean, a CBDC is as safe as you can get in the fiat world because it's a direct liability of the central bank by definition. Like, why do we care if banks fail? Like, people have a thing. Now, there'll be knock-on economic effects. I'm not calling for bank failures, but of course, the question around credit provision in the economy is very important. But people can lend credit without being a bank, or people can extend loans without being a bank. So I think this idea of like not throwing the baby out with the bathwater, not saying like, we've got this model, how can we make that safe for somebody else? But actually saying, well, hang on, this kind of changes the landscape quite a lot and is quite interesting. I think it's that kind of creativity. And I think, again, policymakers and regulators are aware of this and they think about these things. The trouble is their need to create rules and respond to crises and respond to, FTXs of the world and stuff like that comes so much quicker that actually there isn't time for them to think through all this kind of bigger picture stuff of what world do we want to live in 5 years, 10 years, because they've got to respond to stuff now, or actually yesterday.
And you touched base about speaking to regulators. I 100% agree to it. Now, a lot of people in the cryptocurrency space absolutely dislike Gary Gensler. Partially, I agree to it, but if you actually go to the website, he does have an open dialogue, and he's asked people to, speak to them regarding the regulation aspect of it. Now, what happens after that, I really am not sure. But Gary Gensler, he has been an educator so far as blockchain technology is concerned, going back to 2013 and 14 as well. So, what he's saying does make quite a lot of sense. Now, regarding stable coins, I do have a question, and this is more to do with the UAE Central Bank. Because they've released a regulation called as Payment Token Service Regulation. I'm not sure if you've got a chance to read through it, but how do you view the current regulatory landscape surrounding stable coins in different jurisdictions? And now, what do you think are the implications for global financial stability? And this is again a question around stable coin once again, isn't it?
No, yeah, I mean, I think the central bank, well, we touched on it earlier. I think the central bank of the UAE has done something very interesting in sort of very closely protecting dirham-based stable coins, but being very open to internationally backed stablecoins. And that, I think, is exactly the right approach, because I was talking earlier about international fungibility and the ability to kind of benefit from the efficiency of these things. I think the central bank of the UAE has really done the right thing there. Like, they're preserving their role in sort of the use of fiat in their territory through their rules on a dirham-backed stablecoin, but still allowing innovation for international firms. Of course, UAE has an awful lot of expats and international firms there. So allowing them to use the technology and the instrument they may want to use internationally. I think they've done a really good job on that. And it's very different to how the UK and the EU see it, right? Like the EU, for reasons Circle had to get an EMI license and had to create this sort of European version of USDC, which somehow they're going to themselves trade with, let's say, original USDC through some mechanism. The reason they've had to do that is because Mika says very clearly, like, euro-backed stablecoins are fine with following these rules. International ones have caps, they have limits, they have other requirements on them, precisely to stop the dollarization of the EU economy, as we talked about earlier. So in that sense, I think the UAE has proven itself to be much more open, much more innovative, much more relaxed, but still looking after its core interests than the EU has, for example.
Now, 100% agree to it. And what I really am liking is you said actually what the regulation talks about, because I remember when the regulation was out, people on LinkedIn, they were writing a lot of incorrect and misleading information. The headline actually was stating that cryptocurrency payments in UAE has been stopped. And this is the end of cryptocurrencies. And I was like, that is not what the regulation states. It talks about, where you can go and use stable coins in quite a lot of the things. And for our listeners, I'm releasing a standalone episode going in detail, explaining what the payment token regulation is all about. And what Andy said does make quite a lot of sense. Now, let's talk about your book, Andy, that is Regulating Banks, The Politics of Instability. Can you tell our listeners what is it that they can expect from this particular book?
Yes, well, I mean, a lot of the conversation from this podcast kind of stems from it. So if you found this interesting, then please read it. If you didn't find it interesting, you may not find that worthwhile reading. It really stemmed from my PhD and the sort of development of it. So it's sort of quite academic, certainly in its early stages. But really, I wanted to answer the question: why has banking regulation not led to financial stability. We keep regulating, re-regulating around the world over history, and it doesn't work on its own terms, right? Now, I looked at banking because that is the traditional form of finance for most of the world, and my book has a series of historical case studies from the UK to try and sort of keep the sort of scenarios as similar as possible, so we can draw some insights out of it. So I was looking at bank regulation and its effect on financial stability. I put forward this idea that there's a financial regulatory cycle whereby politicians create laws for finance, regulators interpret those laws according to their own objectives and understanding, and then markets react to the rules that regulators have put on them. And the effect of that, through this series of case studies I've shown, has been market crises, bank crises, which then starts the cycle again because politicians say, well, we need a new set of rules, a new set of laws. So you get this cycle, and I hope I've shown it correctly through the book that this exists and it has certain effects. For me, the key, interesting point, that's kind of like a narrative, but the interesting thing is what has led me ultimately into this crypto space and a lot of the themes we've talked about, which is banks exist because of the rules put on them. Like, banks don't exist in nature. There is no such thing as a bank, in reality. A bank is created by the laws that enable somebody to call themselves a bank. Change what those laws are, change what those rules are, you change what a bank is, you change what activities it does, you change its market effects. And so this definitional idea of regulation is really where I originally come from a lot of this conversation we've had around enabling regulation and stuff. Now, it's interesting, right? Because I think we are in a period of time where, because of technological change, a lot of the stability of thinking behind banking is changing. Now, initially, this was in fintech, right? This is people trying to unbundle banking and saying, well, which bits can we do and what are the rules? And then crypto is even the next stage beyond that, to saying, well, hang on, Bitcoin is saying, what is money? The financial rails can be completely changed via blockchain and stuff like that. So that's what got me into the space. I'm like, well, hang on, all the stuff I'm saying where banks don't really need to exist in the modern world in the way we have them. And actually, I'd go one stage further, and I would say, if there's a hill I want to die on, well, I don't really want to die on it, but if there's a hill I will die on, it's it's to try and remove the protections in law of banks' business models. I don't think they need to happen. I think it's pernicious. I think it's bad for markets, bad for consumers, bad for financial activities. Fintech, Bitcoin, crypto, blockchain as a whole is a way of moving on to that next stage of things if the rules allow it. And that if is the bit that I kind of am tackling here, which is helping policymakers, helping regulators understand the situation they're in and saying, look, you can safely change these rules, which will allow this new sector to grow and get rid of a lot of the problems of the traditional financial banking sector, but still manage it in a stable way, right? In a safe way. So this book really unpacks all of these themes. I mean, it talks about it in depth in a conceptual way and then a historical way to look at it. But really, it's trying to get to this endpoint or kind of lay the groundwork for this idea of regulation and policy supporting innovation and improving financial markets.
And where can we get this book, Andy? Because I was trying to check it in Amazon UAE, but the book was not available for some odd reason. Is it available in Amazon UK by any chance? Or
it has been available on Amazon UK. I'm not sure. I haven't checked recently. It can be bought from the publisher's website. They're called Agenda Publishers, AGENDA. So it can be bought from the publisher's website. I would warn your listeners that it is an academic book and priced accordingly. So it is, slightly more expensive than you might expect in a bookshop. But do please, if you're interested, get in touch.
what I'll do is, I'll definitely go ahead and mention the details in the show notes as well. And it'd be great, if people can get in touch with you directly as well.
Yeah.
Now, with your experience in both the banking and cryptocurrency industry, how do you perceive the current regulatory environment for cryptocurrency in the Middle East compared to Europe? And you've touched base on most of the points earlier on as well.
Yeah, I always find it difficult to talk about the Middle East. So I was head of policy for Europe, Middle East, and Africa for Ripple until yesterday. But the Middle East is very different, right? It's very diverse. It's heterogeneous. So talking about different countries, you get very different answers. I think, the environment in many countries. Well, let's focus on UAE, right? It's where you are, and it's probably interesting to most of your listeners. It's a very dynamic market environment. I love going out there for meetings with business. Everyone's kind of got ideas, everyone's got plans, everyone's hopeful about the future in a way that's not necessarily the case in Western economies. And it's basically good luck. You've got an idea, you want a partner, great, good luck, and hopefully it works. And if it doesn't, move on to the next thing. That is very exciting, dynamic, it's positive. As I say, I love going to Dubai for that kind of thing. I think the public sector, it's the same, right? Dubai or UAE's public sector is the same, and as much as they're part of that sort of enthusiasm, they probably stoked that enthusiasm, not just in crypto, but economically as a whole. This is the result of their actions as well as them partaking in it. So I think that, that's a really bright spot. You go to other countries in the Middle East, and they don't necessarily have that same either dynamism of the market and perhaps international openness, or they're trying to protect different interests because each economy has a different sort of economic base. And there's no one size fits all. And I think if there's one thing maybe out of this conversation, like your listeners might take, it's policy is really local. It's based on local context, it's based on local history, it's based on local interests. And yeah, there may be kind of things different countries can learn from each other. I mean, I hope they do, and I think they constantly do, both positively and negatively. But like, you've got to understand that local basis and understand what's happening on the ground through policy, through markets, to really understand which policies will work in which way, or which regulations will have what effects. And there's no guarantee of anything. It's not mathematical. It's not technical. It's a question of politics, of society. It's a question of people talking to each other, learning, understanding, and trial and error, frankly.
Now, Andy, I'm quite active in Telegram, and I send it to some of my followers that, I'm interviewing you. And one of the listeners, or followers rather, did ask this question, and he asked me to ask you, is that the world needs the banking system, but not the banks. So regarding the statement, what is it that you have to say regarding the statement?
I mean, I think I agree, right? I think I've just sort of said when talking about my book, which is, well, I mean, I might disagree around whether we need a banking system. We need a financial system, and we need the elements of banking, which is, fundamentally, banking just means deposit taking and lending, right? There are huge academic discussions around the order of that. But so long as you can store your value somewhere, and so long as you can gain credit where you need it, like, yeah, we don't need banks. I mean, I precisely agree. I think my comments around not having banks' business models protected by legislation is exactly what your follower said in a much better way.
That is absolutely great. Now, look, Andy, there's a lot of hype regarding tokenization, and there are quite a lot of events taken up. So can you give us a macro level update and the progress and what is going on so far as tokenization is concerned, keeping in mind the regulatory aspect of it?
Yeah, tokenization is interesting, right? So my take on this is, first, tokens had to be invented, and then you can tokenize something else, right? And so I think, I mean, literally in a sort of technological sense, but then also in a regulatory sense, we've seen that first wave, which is what is a token? Like, first inventing it, then people using it, then regulation defining it in law and kind of rules of the road. And that basically is finished in most of the world this year, next year. But having that first layer, that first step of what is a token, you can now do the next stage, which is perhaps more interesting, which is saying, okay, well, now we know what a token is. Now we've got tokens. We can tokenize other things. We can turn them into tokens. So that's kind of how I see the sequencing and kind of the concept behind the thing. Obviously, I'm sure you know better than I do, like, industry is very excited about tokenization. It's a buzzword, has been for a year or so now. Some of the numbers that various management consultants come up with for the total addressable market for tokenization is astronomical in its entire global economy. I don't think that is probably going to be achieved, and I'm not sure it needs to be. I think tokenization is good for some things. Some of the major benefits are liquidity, our fungibility, our inclusion, perhaps if people are allowed to be included in it through the laws. But not everything needs to have those benefits, right? And not everything needs to be like seamlessly or efficiently transferred. Many things do, not everything does. So what I'm getting at is, I think we will see a lot of tokenization use cases developing, but I'm not sure we will see the current existing economy tokenized. Let's put it that way.
And I'll tell you where the whole hype and buzzword has come from. After the spot Bitcoin ETF got approved, Larry Fink, he had an interview with CNBC, and he actually said that, he does not care much about the spot Bitcoin ETF approval. And he talked about tokenization. He thinks about tokenization is much more beneficial. And I very specifically remember in my episode that I released, I said that tokenization is the next buzzword. And the very same day, Andy, on LinkedIn, overnight, I saw people becoming experts on LinkedIn. So I literally saw 21 articles talking about, tokenization. But regarding tokenization, and you have a very technical question, so to speak. Now, from a regulatory perspective, you have KYC and AML. Do you think it could work more on an open blockchain or on a permission blockchain? Because you have the secondary market as well. What happens, let's say, if in the secondary market, if I decide to go ahead and sell it to someone, let's say from a sanctioned countries?
Yeah, I mean, look, this is a real question that regulators are grappling with at the moment.
Yeah.
Even this week, the Bank of England had a roundtable on the use of public and private blockchains. I think thinking about stablecoins, I think, rather than tokenization per se. I'm not sure. But it's a live question, and precisely for the reasons of KYC, AML that you talked about. I think, I don't know the answer. I don't think anyone knows the answer, what they'll come up with. I find it hard to see that they will be comfortable with something that's called permissionless and public if there are these risks here.
Exactly.
I think there's a revealed preference of central banks. If we look at their CBDC work, almost all of those are done privately, right? And I think that is a revealed preference right here. Now, that's slightly different to the stablecoin conversation because these things already exist. They're already public. I think it's a bit of a shame because actually, I think it's misguided in the sense that a bit like, banks use the internet, but the internet doesn't have to be private and completely run by a bank, right? It's just a technology that everyone uses. Banks need to be able to mitigate the risks that might come from the internet, either breaking down or not being reliable or being hacked. Yeah, you actually mitigate risks from the technology you use. But you don't need to control the technology. And that's certainly how I feel that policy around this question should be developed in the crypto space. I don't believe that's how regulators will decide, but that's how I think they should decide.
Yeah, I do think, the tokenization, once central bank digital currency gets mainstream adoption, that is where it would work perfectly fine.
Yeah.
And let's say it would work even in the secondary market in a relatively reduced jurisdiction, so to speak. Nandi, can you tell us a bit about, your new business endeavor, and can you share more lights into that?
About my consultancy, sorry.
Yeah.
So you won't be surprised to hear at this point, but it really stems from a lot of the conversation that we've been having here and all the thoughts behind it. But my real aim is to try and help companies grow through regulation. That's what I want to do, and I'm sort of offering them policy support, advice on this regulatory business model question, strategic policy engagement, how they can best learn and interact, take part in this conversation we talked about between the public and private sectors. And moving, as I said, between different countries, jurisdictions, between different sectors, between different styles of regulation. So I hope to be able to help them with that. I mean, you won't be surprised again from what I've said around how the public sector should work, but I really think people work best when you mix together public, private, and academic sectors. When you get insights from all of them, bring them together, when you collaborate, when you're transparent, as much as you can be transparent, without commercial secrets and things. And you try and build interoperable solutions. I think not just in crypto, but in general, we're all doing better. Economies grow better when people work together, rather than trying to fight for their little slice of the pie, grow the whole one. I'm not sure I can do that on my own, but hopefully that gives a flavor of the sort of advice and approach I take.
That's what I was going to ask. Is it a one-man team, or do you have another team along with you? Or
no, it's one man. We'll see about growth, but right now it's a one-man band. But it's got to start somewhere, and I'm very excited.
Yeah, it'll be great, if you have the academy involved in it as well, because I can only think of one university in Dubai where they're talking about something to do with blockchain technology. They're not getting into the nitty-gritties and details about it. So I think, yeah.
Well, no, I was going to say, I think NYU Abu Dhabi has some courses on it, which is probably worth it. And then the other one is not in Dubai, but I know they do some partnerships with VARA and other things, is IE University in Madrid, which was a business school, which is now a full university. And they have a really great program in the science and tech department, as I say, which kind of works with VARA to look precisely at blockchain, the technology, business cases on it, and policy and regulation around it.
Brilliant. Now we're pretty much done with everything, Eddie, and I do have one question which is not connected to cryptocurrency regulation or policies. That is to do with music, because look, England, and I lived in Manchester for some time. It has, if not the most beautiful, music scene. What is your favorite genre of music?
Well, I mean, actually related. I mean, so I play the guitar, so I basically love anything with a guitar in it, from very traditional rock to I'm currently learning flamenco guitar, which I love. It's sort of improvisation, but on a classical guitar. So yeah, anything guitar based, I absolutely love.
I do play the drums as well, and I play for two extreme heavy metal bands. We should definitely try to jam up.
Let's meet up.
Definitely 100%.
And heavy metal go together, but we'll work on it.
And do you have anything else, Andrew, that you'd like to tell our listeners, be it, let's say, about the upcoming journey, anything from the cryptocurrency point of view or regulatory and policy point of view to our listeners?
Look, we've covered a huge amount of ground in this conversation, and I mean, thank you for inviting me on, and thank you for having a conversation with me. It's been really interesting. But I think any last message is exactly what I just said. It's around collaboration, it's around growth, it's around this excitement. For me personally, this is the first time I've not been in a academic, public, or private sector institution, and just instantly everyone, it's almost like looking up from your desk and seeing the world around you. Like everyone's doing partnerships, everyone's growing things, everyone's starting a startup, everyone's got an idea, everyone wants to help, everyone there's a lot going on. It's really exciting. Don't forget the policy, because nothing could be done without sort of some interaction with the public sector. But it's this collaboration, this mindset, this growth mindset, is really very exciting. And I don't think we've really, certainly haven't seen the end of it. I think we've barely seen the beginning of it.
That is beautifully said, Indian. Thank you so much for doing this. Really, really appreciate it. I'm sure our listeners will definitely enjoy this episode. Thanks once again for doing this.
Thank you very much.